What if the future of Canada's economy hinged on one man's return to power? The stakes have never been higher. Donald Trump's return to the White House could profoundly impact Canada, its biggest trade partner. Before the election, Trump hinted at imposing tariffs of 10 or 20%, or even more, on Canadian goods. Economic forecasts suggest these tariffs would severely damage Canada's economy, where nearly 80% of exports are U.S.-bound. Trump's advisors also suggest he will demand that Canada increases its defense spending to meet NATO commitments. Canada's chief negotiator, Steve Verhoeven, warns that Canadians should be quite anxious about the Canada-U.S. relationship. Verhoeven explains that Trump's attraction to tariffs poses a significant threat if he follows through on his promises. Canada faces ugly choices, with the main option being to seek an exemption from U.S. tariffs, but at a steep price. Janice Stein from the Munk School of Global Affairs highlights that Canada is the most dependent country on a single export market. If Trump imposes a 10% tariff on Canadian exports, Canada would likely enter a recession. Economic analysts have prepared various reports on the potential impact of Trump's tariffs on Canada's economy. Scotiabank concluded that Trump's policies could lower Canada's GDP by 3.6% and raise inflation by 1.7 percentage points. TD Economics warned that real GDP could fall by 2.4 percentage points over 2 years due to a minimum 10% tariff. BMO Economics noted that Trump's policies would raise inflationary pressures and force Canada to align its tariffs with the U.S. The Business Development Bank of Canada estimated a $7 billion loss and 20,000 lost jobs in the first year of Trump's tariffs. The Canadian Chamber of Commerce concluded that Trump's policies could reduce Canada's GDP by up to 1%, costing $30 billion. On defense, former U.S. Ambassador Kelly Craft stated that Trump will demand Canada pays its fair share for NATO. Trump's tax proposals could complicate the finances of businesses competing across the border, forcing competitive tax cuts in Canada. Janice Stein emphasized the importance of Canada selling itself to the U.S. to matter more under a Trump presidency. PPF's Matter More report suggests Canada should focus on defense spending and critical minerals to deepen ties with the U.S. J.D. Vance, a key player in a Trump administration, represents a generational challenge to America's political landscape. Take him seriously. As Canadians wake up to the shocking news of Donald Trump's return to the White House, a wave of uncertainty looms over Canada-U.S. economic ties. Trump's promise of a universal 10% tariff on all American imports has Canadian business leaders deeply concerned. A recent Canadian Chamber of Commerce report warns that these tariffs could shrink the Canadian economy by $30 billion annually. With over 77% of Canadian exports heading to the U.S., the stakes couldn't be higher. The manufacturing sector, being the most trade-exposed, faces the greatest risk, says Dennis Darby, CEO of Canadian Manufacturers and Exporters. Darby emphasizes the importance of seamless trade for consumers across North America, highlighting the complexities of the situation. American economists caution that Trump's tariff plan could trigger inflation and possibly a recession, impacting Canada as well. Consumers will bear the brunt of rising costs due to tariffs, warns Darby, as prices for goods and inputs soar. TD economist Mark Ercolao predicts a near 5% drop in Canadian export volumes to the U.S. by early 2027 if Trump's plan is fully implemented. With the Canada-United States-Mexico agreement up for review in 2026, Canadian leaders stress the need for collaboration to preserve and strengthen economic ties. A looming economic storm threatens Canada as President-elect Donald Trump announces severe tariffs targeting the nation. These proposed tariffs could cripple Canada's manufacturing industry and derail its economic recovery. Analysts warn that Canadian GDP growth could take a significant hit, straining the North American trade system. Key sectors like energy and auto manufacturing are at the greatest risk, facing dire consequences. The uncertainty casts a shadow over Canada's export-driven industries, with long-term risks looming. In a shocking post, Trump confirmed tariffs would take effect on his inauguration day, unless Canada tightens measures on migrants and illegal drugs. The loonie plunged to a 4-year low, reflecting market fears of heightened volatility. Canadian officials scramble to contain the fallout, as analysts gauge the economic impact. Stephen Brown from Capital Economics highlights Trump's swift move to impose tariffs, echoing his first-term tactics. Brown suggests that countries could avoid tariffs by presenting credible plans to reduce drug supply or secure borders. Robert Kavcic from BMO Economics notes the immediate impact on the Canadian dollar, predicting further depreciation. Kavcic warns that the ultimate size and coverage of the tariffs will determine the extent of the negative impact on growth. Energy exports, nearly a third of Canadian goods to the U.S., face legitimacy questions under these tariff threats. A softer growth profile could set the Bank of Canada on a more dovish path, but inflation concerns remain. Avery Schenfeld from CIBC sees the tariffs as a move to get action on border issues, warning of challenging times ahead. Schenfeld emphasizes the shockwave a 25% tariff would send through Canadian industry, affecting U.S.-based companies too. Governments will be pressured to prevent or quickly remove these tariffs to avoid economic damage. Royce Mendez from Desjardins Capital Markets highlights the severity of the pledge, leaving other trading partners unscathed. Mendez notes that the depreciation in the Canadian dollar reflects uncertainty about the tariffs being implemented. TD Economics warns that the 25% tariffs could lead to a 5% hit to Canadian export volumes, risking extended economic stagnation. As threats loom, the loonie remains under pressure, potentially pushing below the 70 US cent threshold, dampening investment sentiment.